As we rebuild a post-COVID world, is universal basic income the answer? Could it help stem the tide of the pandemic and consequent financial shocks? What are the rules of the game and what ingredients need to be placed in for universal basic income to work? To answer these questions, we have with us today Mr. Abhishant Pant, founder and CEO at Fintech Yatra. Abhishant will also guide and moderate this session. Welcome to the discussion, Abhishant.
Thanks a lot for having us in the platform and we'll be trying to share our perspective of where do we see the opportunity and the ecosystem evolving. Now, before I begin my conversation, I will also give a brief intro to the topic and will introduce my fellow speakers. Just on a check basis, Ravinder, can you hear me and can you see me properly? Okay. So, as we start to discuss the topic on the COVID-19 and its impact on Indian fintech ecosystem, I'll start from possibly February mid. I was in London and was meeting with fintech startups, with fintech influencers and all of them, and had absolutely no idea that in 15 days time or so, the environment is going to explode like this in terms of the way we are experiencing it too. And then within next 15 days time or so, Europe started exploding with the COVID wave. And I think in mid of March or so, we started experiencing the first tremors of it. And by end of April, it was very clear that this is going to be long haul. Somehow, interestingly, in next 7 months or so, we observed that startup found resilience, startup found one or the other way of identifying, surviving, and possibly working in this challenging environment. Over this next 8 months period, certain interesting things happened, and we'll start talking about that. I'll not essentially do a monologue in that sense. What we'll do is just that give a very brief view of each one of them, and we'll take it forward from there. In payments specifically, market went movement upwards like anything. The consumer side of payments moved up like anything. If you look at the November numbers, UPI, it is 2.2 billion, which means greater number of consumers are adopting payments. At the same point of time, within lending, there were multiple domains which opened up. Gold or asset-backed lending moved up. Pre-approved loans moved up, and so on and so forth. Of course, certain part of lending took its hit. And then in insurance, possibly for the first time in the history of insurance sales in India, it became a pull-based product rather than push-based product, which is the consumer started demanding for that product on its own. And that's where insurance value chain started moving up. And we'll have Ravinder to share more about that. I mean, in all of this cycle, we also did an interesting survey on the venture investment piece during this period, and at least till September, till which we mapped the fintech venture investments, we found that the venture investments in first 9 months of 2020 in the fintech domain was actually higher than first 9 months of 2019. So somewhere venture investors also possibly provided greater faith to the ecosystem, and that's where possibly Hero and his view will come into picture in terms of giving us an idea of where venture investment has gone. And then finally, in payments, we have seen a wave of B2B supply chain solutions as well as neobanks coming into picture, and possibly 90% of neobanks in India or essentially new age fintech institutions from Credit to MobiKwik and others, which are powered by Yap and Madhu, will talk a bit about on that aspect. And similarly, from a B2B supply chain and embedding of financial services on top of supply chain solutions like school fee, like large financial institutions, HPCL, Bombay Stock Exchange and others, which get empowered by Fi-commerce, and Jose will talk about that. So that's kind of a brief overview and the background of things. I'll now go speaker by speaker and will ask them to briefly introduce themselves and give their perspective of the domain in which they are and how they have observed that domain evolve. they may or may not want to name a client specifically, but maybe an overall spectrum level view and so on and so forth. So maybe we'll start from Jose and then we'll move forward in the same manner in which we are structured in the call. Over to you, Jose, the founder of FiCommerce.
Thanks, Abhishant. Hi, my name is Jose and I'm the co-founder and CEO of FiCommerce. So we are an omnichannel payments company. And we process transactions across the country. We process transactions for a large number of institutions as well as networks. And so, Abhishant, to straight jump into the topic, I'd like to actually sort of classify my observations in two. One is the mode of transactions, and the other is the use cases that have sprung up. So, if you were to look at the actual mode of transactions, I think this is possibly the moment that something like contactless has been waiting for. Given the growth of contactless over the last 6 to 8 months, and when I say contactless payments, these are not just card-based contactless, but these could be something like a QR transaction or a UPI-led mobile-based, alias-based transactions. But contactless has been the name of the game over the last 6-8 months. In fact, if I were to look at some of the data that we have, and I've been, also speaking to a lot of my counterparts, with our limited data, we've seen almost an 8x growth in contactless transactions, both the UPI type of transactions as well as contactless card-based transactions. So I guess contactless, this is the moment that we've been actually waiting for now going forward, given on this ride, we see a lot of other things happen, things like tokenization, for example. More and more consumers with NFC phones becoming more common. We see contactless grow big, even in in-store transactions, even on the mobile and stuff like that. So that's one learning that we have had, that before pre-COVID, contactless was at least 3 to 4 years down the line where we expected that to happen. Now it's probably fast forward a couple of years. Maybe on the use cases, I'll come back when you circle around others. I'll end up hogging the conversation at this point in time.
Sure. And if we look at Ravinder, from your point of view, what you have been propagating and promoting is actually contactless from an insurance value chain point of view. So maybe you just give us a view of how you observed during this period things evolving.
Yeah. So hi sir, thank you for this opportunity. First of all, so coming from WIMWIsure perspective, yes, from the first day we were trying to tell the insurance industry that go contactless, go for self-inspections, go for digital things. Definitely COVID became a watershed moment for us, that what we were trying to tell to the industry, people were like, yeah, it will get accepted, because we know that whenever a mammoth change is there, like InsurTechs and Fintech, all are big organizations, right? So any change to be driven for them takes a lot of time. But COVID gave us a moment that what these organizations were trying to do for years together, they had to do it within months, right? So despite the fact that everything was locked down, we were able to, the insurance companies had to survive, right? They have to, as you told, despite this became a pull product, but I will not be able to comment much on the health side, but on the motor side also, where the complete lockdown was there, but still there were emergency vehicles which were on the ground, or the corona warriors, ambulances, police, all these people needed insurance, right? So we could not have denied insurance to these people. So that way was the time when companies really realized that contactless was something they required. And the kind of change which we saw in terms of insurance services specifically was phenomenal in this perspective.
Sure. And if I just expand that dialogue, and maybe Hero, you can possibly give a counter, or maybe in line view, dependent on how you see that, which is when I hear Joe's talk about the manner in which payments have expanded, or when Ravinder is talking about how insurance companies, who possibly to an extent are seen as laggard from technology point of view, have come up the curve and have started adopting technology at a much faster pace, and so on and so forth. Now, when you are observing at a portfolio level as a VC, do you see that it's kind of a universal trend in a way that the digital adoption curve has increased, and maybe some of your portfolio startups have observed it at a much faster pace than what we at market are looking at?
So thank you, Singapore Fintech Festival and Abhishant and team for an opportunity to share the views. I'm Hero. I'm a partner at BEENEXT based out of Singapore. And to reply to the question, actually, we see very interesting dynamics. We see some bifurcation, but overall, some of our fintech companies that are levered to, let's say, SME digitization theme, or APIification of payments, or riding on the UPI rails, they have already surpassed pre-COVID peak in material way. Cash to digital payment conversion in many areas, in many countries, actually has accelerated actually by 2-3 years in advance, which is really brilliant and great. On the companies that may be still below pre-COVID level, some business models that, let's say, that are exposed to lending type business models, they may be still below pre-COVID level, anywhere between 60 to 80, 90% of pre-COVID level, and hopefully in next 6 months or so, we think they should be able to achieve their pre-COVID levels. So that's how high level we see themes are playing out. And can go into more details what are some of the other developments we see, but high level, that's what I'll point out.
Sure. And Madhu, from a YAP point of view, you are the powerhouse which is powering much of the fintech value chain in India. You are the ones who are driving much of it. So you have also a bit larger perspective, maybe much larger than what most of us see, or most of us will ever see. So one, obviously, from a YAP point of view, did you feel that some of your financial institutions and other partners became a bit more catalyzed in adoption of things? And what did you observe in your portfolio of startup? And I'll call it as a portfolio of startup because you are powering them. So what did you observe at a larger level as an organization?
Sure. Yeah, thank you, Abhishant. Thank you for having me on the on the event. My name is Madhu. I co-founded M2P Solutions, which on the platform YAP is where a number of fintechs and businesses leverage for their banking and financial services needs. So we are an API infrastructure company. We work with banks on one side, and we have businesses that are looking to take the bank products on the other side. Coming to your question, Abhishant, I think I'll break this into sort of 3 parts. Obviously, within the payments sort of ecosystem, as most of us on the session know, India is a very vibrant sort of payment ecosystem. Globally, we have been sort of now looked up as the role model in real-time payments. But what COVID had done was, if you just go back in time, around demonetization, everyone said, it has given digital payments a big boost and a leg up. But today, when we look at what is happening and how it's unfolding, demonetization looks like a trailer, and the real movie is actually thanks to what is happening after post-COVID and the level of adoption that's happening, right? Payments clearly is sort of going through the roof. We see our customers growing manifold. We've been in some of the businesses, they were back to pre-COVID levels as early as July, August, right? So just the next quarter after, it went down. To Joseph's point, very clearly contactless is getting adopted in a big way. Today, globally, Australia is looked up as the market where contactless and payments through the phone are topping 60% plus, right? Even before COVID hit. Highly likely that India has sort of leapfrogged 5-6 years, and we are likely to see the adoption of direct acceptance on the smartphone as in a big way almost all the networks are sort of pushing for it. What that means is, the cost of going and adopting digital payments is going to come down significantly. This will help more and more SMEs to sort of come in and adopt that, right? That's one aspect. With respect to digitization itself, we see a huge impetus from companies that we would call as the disrupted ones, right? So anywhere there is fintech action happening, there's a whole host of financial services players who are operating inefficiently, which is what the fintech idea is looking to sort of disrupt. We have seen COVID actually acting as a catalyst to move some of these companies by years, not even months or quarters, by years in terms of how they would have adopted digital payments and, putting or embedding financial services as part of their, opportunity to the, to their customers. It is because they had no choice. If I have to provide a loan, a gold loan, for instance, my shops are closed. So the only way for me to do is to sort of put somebody on a bike and go to the customer's doorstep to facilitate that loan, right? Which is what gold loan, facing fintech was doing. Now that has become mainstream for much of the digital gold loan companies that are doing it, right? Therefore, and the third aspect to it is a number of use cases that are coming in now are at the intersection of the first and the second, where payments have already got delivered. If you look at, as you would know, payment by itself is a loss leader. So businesses that are getting built out with payments as a hook are delivering more and more of the embedded sort of financial services play in an accelerated manner, right? So we see all of this coming together over the last few months, and there has never been a better time to run a fintech business in India than now.
Thanks a lot, Madhu and everyone else. So frankly, yes. So the way we have seen the catalytic movement, and you are correct, it is not just months, it's essentially years of change. And here sitting in the mountains, I have observed this change like anything. I could not have agreed more with you. And just maybe because most of us have talked from a payments and a lend and insurance point of view and maybe VC point of view, I'll just give a brief view to our audience on the lending side of the story, and then we go to Jose to take it forward from there. So from a lending side of the story, audience, frankly, it has moved to the places wherein we have become a bit more selective in trying to address certain segments. So say pharma, IT peripherals, two-wheeler, used car sales, and multiple of such which have become day-to-day utility value chains. All of them have seen great jump in terms of value offerings. From an SME point of view, it's essentially the asset-backed financing which has taken a flip. Again, from a consumer finance point of view, the gold loan, lending against stocks, and so on and so forth has taken a very positive momentum as such. And then there are multiple other domains like pre-approved loans as a category, which has seen a jump, wherein essentially to say, wherein I as a lender am in a position to best identify and say that this as a consumer and a segment is not impacted from the point of view of COVID, I'm willing to essentially lend, experiment, and do more with that. We have seen, frankly, more and more number of startups coming in healthcare side, in pharma, in FMCG, in small retail chains, and so on and so forth, which obviously will catalyze much of the journeys on that front. So that's kind of a very, very brief overview to you from a lending point of view. Now let us go back to Jose, and so Jose, some of the data points which, if you may want to refer to us, that which are the segments you have observed in last 9 months or so, which have essentially got pregnant with possibilities, if I can say so. So 9 months is the right time to get to reach that point. So if it was March and it is now December, so those are the segments you believe have become pregnant with possibilities. And what are those segments and how you will define them? If you can point out some of them, it will be great.
Sure, Anisha. So before we get into these segments, one other interesting observation was also, it's not just the volume of transactions that have gone up. It's also the value and the range of values. So today, when we actually observe our data, we see a lot of very small ticket transactions also coming in, which normally would have been done through cash. These could be, either in single digit or double digit rupee, transactions which people would have preferred, and also higher ticket sizes. So on an average across the base, we have seen almost a 20% hike in value of transactions, which essentially means that, larger payments which possibly were being done through checks and, other transactions have now also gotten digital. So it's not just the value, but it's not just the number of transactions, but also the value of these transactions which have undergone a shift. Now coming to the segments, I think one area that has been very close to our heart, and we've sort of pioneered that in the country today, is what we call as doorstep payments, doorstep commerce. And believe it or not, this if you were to compare today's levels of doorstep payments that we do, which is essentially what? It's essentially converting cash on delivery transactions to digital at doorstep or digital payments at doorstep. It's a huge increase. It's a as I said, almost 8x increase that we're looking at through contactless payments at doorstep. Now, these could be converting cash on delivery transactions from whether it's shipments from Amazon or food deliveries or payments for other goods and services on fulfillment. And again, the heartening fact here is it's not just restricted to metros or cities. We see a lot of transactions. So, in fact, we process transactions for one of the largest gas companies in the country. And we enable payments on delivery of gas canisters across the country for this enterprise. And what we've seen is we've seen a lot of transactions now coming in from tier 2, tier 3 towns and villages. And this is something, again, Abhishant, we were discussing a couple of days back how you also seen transactions happen from the most rural places in India. And this is a very, very heartening fact for a payments guy like me. Apart from this, I think the other redeeming factor is repeat usage. So, especially for segments like gas and stuff like that, you find month on month, the same consumer from a town or a village is repeatedly using digital payments to pay. What this means is it's also habit forming. It's not just going to be a one-off type of a transaction, but the moment he or she starts using it to pay every month for his gas, there's a high percent of chance that he'll start using it for regular transactions from his retailer, from his kirana shop, as the case may be. So doorstep payments is big, as over the last 8 months it has gone through the roof, and it's not just restricted to metros, but again tier 2, tier 3 towns and villages as well.
So if I can just interject here and just expand the debate to say that you are saying that when I, as a consumer sitting in Jodhpur, I'm ordering maybe something on Flipkart or an Amazon or that point, and when it is getting delivered to me at that point of time, rather than opting for cash on delivery, I can opt for cashless on delivery, which is to say I can opt for paying via QR, I can pay via UPI, I can pay via card. So I can essentially have omni-channel acceptance solution available to me on my doorstep when I am accepting that. Okay.
And what this also means is, see, earlier what used to be the concern from a consumer standpoint was, will the delivery boy accept digital payments? Now that he has the confidence that the delivery boy has a mechanism to accept payments, he will not run to the nearest ATM to withdraw cash and keep with him. So it's all like a nice little, circle that sort of, so once the consumers realize acceptance is available, he is also less, he'll also resort to more of digital payments.
And if I can just, we are not going in a circle in the defined manner in which we were going previously. So if I can bring Hero into this at this point of time, Hero, this again, purely from an intellectual debate point of view, it opens a very interesting possibility of essentially BNPL on delivery. which is when I'm delivering the product at that point of time to that guy in Jodhpur who has possibly purchased that washing machine, and it is getting delivered at that point of time, and then integration of a BNPL product at that point of time could be an interesting solution to be offered. Have you seen anything of similar nature in your environment or in your portfolio or otherwise in US and other global markets wherein you have stayed and worked?
So we are seeing popularity of buy now, pay later now across the globe. Klarna started it, and Afterpay really put it on the front stage for rest of the world. Affirm will come public pretty soon, and their numbers just look amazing. And in India also, we see this trend finally catching up and taking off. And when we think about timing, or when we think about next 2-3 years, we think, even though there are products out in the market over the last few years, we think this is now pretty sweet spot because as Josh rightly pointed out, adoption of digital payments in tier 2, tier 3 towns and villages is becoming now pretty common. It's almost forming like a habit. And once that habit becomes, it's very difficult to go back from that. And now to take it to the next level, remember that India is very interesting place where people in tier 2, tier 3, tier 4 have propensity to spend, but earlier they didn't have means to spend. And now they have means to spend also. And now if you can create these unique products of buy now, pay later and build out and ride on these new habits, hopefully you can create some really great business models. And we are looking at that space actively just to give you some idea. Yeah.
Sure. And if I can just expand this further to Madhu, obviously you are observing much of this from a direct on-ground point of view with the startup and others, founders and fintechs with whom you work. But also you have a bit of a much global flavor by having your presence in Gulf markets and others. Are you observing similar trends over there? And within your environment, within Indian environment, do you think because of the larger digitization wave which is hitting us, this is also a right moment, or it is that moment of inflection wherein BNPL is going to be possibly an amazing intersection of payments and lending? Is this the time for that?
Yeah, absolutely. I think the second part of the question, right, where if you actually sort of look at credit card as a product, it brings together the convenience of payments and the lending line together, right? That's the only product where both are together. If you borrow a personal loan, that money goes to your bank account, you have to go figure out, and the lender is not really, worried about how and what and all of that. So BNPL is the next product which comes close to where the lending property and the payment experience can actually come together, in a very, very unique way. And in a market like India, where credit card has not penetrated for a variety of reasons, right? We're talking about only about 30 or 40 million Indians having individuals having access to a credit card. The bureau records show that there are almost about 400 million people on the bureau, right? Which means that at a household level, pretty much every single household has borrowed in the country, right? So therefore, if you actually apply that, and if you're able to meaningfully, underwrite a customer, you don't need to card them or provide a credit card product. To my earlier point on acceleration that we see on old school companies. So if there is an old school NBFC, which today, is giving loans for, let's say, two-wheeler loans, right? And then they see the same customer going and buying, let's say a washing machine 6 months down the line. And if there's a mechanism by which that credit or the top-up loan can be provided, it's a great property because the lender already sees that customer in their books. They have repayment track record, and they are able to facilitate that money movement almost immediately. And that is the sweet spot, I think, where the India lending opportunity will sort of evolve. And it could be buy now, pay later. You want to call it whatever name that is. We believe that that's a massive sort of opportunity that will play out in the next 3-4 years. To your first question, the first aspect, we also see this trend of what is happening in India or what's working in India quickly getting replicated in some of the markets which are adjacent to this country, right? Whatever Ola did a Grab would want to do or a Gojek wanted to do, right? Which is the Southeast Asia story. Likewise, a number of things that the banks attempt today, whether it's real-time payments or, wallet as a story a few years ago, many of the markets or the banks and the financial institutions in the Middle East region tried to sort of replicate the same thing because obviously there is a lot more South Asian population in those markets, so therefore there is the habit forming and the adoption is a lot more simpler. But newer products like buy now pay later, we see huge amount of demand in those markets. The markets are smaller because considering where we come from, but massive values and money flows that are there. Another interesting, I was speaking to one of the CEOs of a large sort of mall property, a couple of weeks ago. He was saying that we will do anything, that is required to get people come back to the malls, because you should remember, it's not the e-com story in these markets. It's more physical retail, right, and organized retail. So they were sort of asking, how could we actually build a buy now, pay later or visit now, pay later, is what they were more clued on, right there, footfalls into the mall.
Yeah. Yep, and that's interesting. And to Ravinder, this washing machine which was getting delivered in Jodhpur, that washing machine at some stage, at some point of time, when we talked about inspect and insure as a property, do you think this washing machine which got delivered at that home in Jodhpur, I as a buyer who now purchased that policy on a BNPL or otherwise, or card on delivery, cashless on delivery, or cash on delivery, or whatever the way it is, will there be a time in which I can simply take few photographs or a video of that washing machine and can get that insured as well, so that I complete my journey? I went to an e-commerce platform, purchased that. My purchase mediums can be different, from credit card to BNPL to debit to direct from account to others. Then I got that, and now what remains, and what is also a big piece which is still remaining with most of us Indians, is ensuring the products that we purchase, so that our financial safety in that net is taken care of. Do you think that's a possibility, or at least I'm living in fool's paradise on that?
No, definitely it's a possibility, and I think for that possibility only WIMWIsure is living the dream right now. So yeah, going beyond, when we say that we want to ensure every possible which is being delivered right now on the ground will definitely be one of the things which he can do. And as you are right, it's just taking some photographs and a video and just to identify that yes, the physical asset exists, because for any kind of insurance, it's just that the existence of the asset is required, right? So apart from that BNPL, extended warranty or anything, the insurance can always be sold right now here. And as I told, there is a very big market which is coming in this for the extended warranty kind of thing, right? So it's not just when he's buying that insurance, because what is happening in India, or like in any kind of insurtech ecosystem, is like the major impetus is still on selling of the policies, right? Just sell it, right? So maybe the customer will buy it, but the moment he will have issues with that washing machine, if he has to resort back to the same old physical methods, or a person from the service team will come and he has to write a paper on a piece of paper that what is happening, then the entire story is again broken. So it's not just at the time of buying, but at the time of claim servicing also, that again, if he can just make a video and just claim that this is not working, and the insurance company is able to fulfill that claim, or the warranty services company is able to fulfill that requirement of warranty or a repair, right? We can assume that the way we have realized in the COVID is like, out of 100 things which we're doing, 90 could have been done online, right? In the similar space, lot of repairs which are happening, right? So those repairs can be done online also. You can guide the customer that you can do this, or you just do this basic 5-minute stuff and the thing might work again, right? So there is no requirement of a physical person coming again. So until unless we look at the perspective from an entire value chain, that buying, claim servicing, extending the warranty, till that time comes, like we will not sit at peace. That kind of scenario we have to put in that washing machine perspective.
Sure, and if I can just expand that washing machine further to say that, okay, I am the delivery guy who came to maybe because Hero is close to Rajasthan, so Hero's place in Rajasthan, and he got that washing machine delivered over there. And once that washing machine is delivered, is there, and so on and so forth, at that point of time, when I'm paying, and once possibly I have paid, is there a possibility of within that payment embedding the cost of insurance plus asking the consumer once the payment is done, sending the consumer with a link to essentially go to and do self-inspection and purchase a policy? What will be the roadblocks in achieving this as an outcome? The reason why I'm saying that, what it does is this, that it suddenly opens up doors of opportunity and possibility for fi-commerce, because they are there at the payments last mile. It opens a doors of opportunity for you, because then you can be at the insurance last mile of that. Like say, while it is one on this side, on say in terms of a washing machine being inspected, or otherwise it can be an HPCL gas cylinder which gets delivered at the doorstep and can get insured, and so and so. So what is the broken leg at this point of time in ensuring that this journey can be completed?
I think if we primarily see here, the major bottleneck is the product, because the kind of models which are running into the market right now are quite intensive. They need a service, like they need manual efforts, and obviously they become costly. So unless we tell someone all this, like we can remove that cost part, or we can remove those requirements. Otherwise, it's just the product conceptualization and taking off the ground, because everything else is in stream. That guy is standing there, he has the phone, he can do the inspection. Everything is in place. We just need a product from the insurance company that this can be done.
Thanks, Ravinder. And Jose, if I can take this to you then, and then to Madhu, that do you think that possibly, if not now, maybe 6 months or a year period or so, is the time when there will be next level of integration, which is, of course, the idea of payments getting integrated with lending is something which has reached its time, its shape, its size, and everything. And then the idea that payments can be somewhere integrated with insurance, the realization of that idea is something which is maybe maximum 6 months to a year away? Or you think it can be explored, identified in terms of embedding insurance products with the last mile payments as such?
So, Abhishant, I would say 6 months, 12 months, no, not really. It is happening today as we speak. So, even today, for example, we are integrating, there are some integrations on to integrate with insurance companies, insurance products that can be actually, displayed and sold during the transaction life cycle itself. So, for example, imagine, for example, we process a lot of payments for educational institutions. So during a checkout, when the parent actually pays a fee, do you want to add a small, COVID insurance there, or, health insurance or things like that, which actually means that along with payment of the fee, he's also buying an insurance product for his family, his kids, as the case may be. So that integration, and so is the case with lending. So today, for example, we have integrations with, providers who give easy installment-based payments, right? So both of these are there today in the market. Of course, the popularity will only go through the roof over the next, 12 to 18 months. But the integrations are already in place, and the offering is already there in the market.
Anything from you, Madhu?
Yeah, I think like Joe said, there, a lot of this is already sort of happening. I think what is changed, is that insurance is not the kind of push that it required. So the nudging has happened softly. You don't no longer have to push this product. There are two segments where, by regulation, you have to take insurance, right? If you borrow, if you're buying a car or any vehicle for that matter, by default, insurance is packaged and bundled as part of that product itself, right? So you get an on-road price. Likewise, if you're taking a home or a mortgage loan today, they take a life cover and things like that, right? So these are more from a risk containment standpoint that, those policies are sold. But if you actually give it a consumer lens, and if you're able to nudge the customer to say that this is in your interest and the protection and the risk management part of it, I think a lot more customers today are ready than ever to sort of adopt that. Right? And that the first sort of wave of that is what we are seeing in health insurance. The other products eventually will sort of take over as well.
And Hero, from your side, if we need to possibly not long, but if we need to do a bit of a crystal ball graze in terms of the way you think market will stand for fintechs in next maybe 6 months time, maybe June 2021, what domains, which areas you think will be the ones which will clearly be seen as the winners, and which one possibly will need a bit of tweaking and revisiting themselves to be able to make sense of the market at that point of time. And also, are you so when I was having chat with you yesterday, you talked a very, very interesting piece from an Airbnb point of view, wherein you said that they have fundamentally revisited themselves as an institution in terms of offering more nearby experiences, nearby travel, and so on and so forth, rather than essentially offering things thousands of miles away. So if an organization of size and scale and impact of Airbnb can foundationally revisit some of the ways in which they were doing things, what do you think maybe some of the pieces fintechs still need to do and haven't done?
It's actually a pretty difficult question to know the crystal ball and predict everything perfectly, almost impossible. But going back to the Airbnb example, so their core business was around all these global travelers coming to destinations and spending time. And when COVID hit, you can truly see the leadership strength from Brian and the team, and how they were able to see that people prefer to stay closer to the home, and within less than 150 miles, they were able to retweak the whole product, and had a massively profitable Q3 right before IPO, which is very brilliant when their business was down close to 80-90% in Q1 when COVID hit. And that shows a lot of agility and leadership skills and how you build the product. And I think brilliant founders always found ways to build and scale the business. And we have in our portfolio, we have fintech companies where business was down from March 25th to sometime mid-April, or that April month when lockdown happened. The business was down 70, 80, 90% from pre-COVID level. And as of today, their business is up 2.5x right before pre-COVID level. So it really takes a lot of effort and agility to retool and tweak. But I think the biggest thing we see is how this digital payment wave has came. Now, even if you go to a chai wala or any stall in any remote area, they are very much familiar with QR codes or UPI and taking these payments. And now all you need is these exceptional founders or people who are in the industry who see this new wave coming in, and then build out this new business model to empower tier 2, tier 3, tier 4 and population in the village to give them the accessibility to have access to the products that they didn't have earlier. And that's how we see the business model coming out. So rather than restricting us to a particular domain or trying to predict that I want to bet on, let's say, insurance product or alternative lending or gold related products, we are pretty much open to anything where we see innovative founders are coming up with these brilliant ideas, because they are the one who knows more about where they see a need and gap, rather than us trying to predict it. And last point I'll make is, as Madhusudanan earlier pointed out rightly, that when demonetization happened, that was just like a drop in the bucket. This moment is much bigger. We have much better infrastructure now, and we have really remarkable quality of founders, and there are great engineers who can build out really big companies. So from VC investing point of view, we are actually really excited to build out hopefully not only a unicorn, but decacorn type really big companies over the next decade based out of India and this part of the world.
And if for last comments to Jose, then Ravi and Ravinder, and then to Madhu. Again, anything that you further want to share, advise upon the manner in which the world is evolving, and any specific thing, anything that you believe, and maybe if you can do a bit of crystal ball grazing, where things will stand 6 months down the line or so, and anything that you may want to share. Jose, over to you, then Ravinder, then Madhu.
So, Abhishant, last point from my side is that, we've all been talking through this last 40 odd minutes around the consumer payments. But we believe business to business payments also, adoption of digital will become huge. The trend has already started. And I think that is going to be the next big wave of B2B payments, and as well as solutions around B2B payments will become the next big wave.
Ravinder?
I would definitely say, sir, the only thing which I would say that organizations in the insurance space will have to definitely pick up more on the smaller organizations like InsurTechs to be the enabler for them to achieve what they want to do. Because as we look at the other side of the industry, payments, lending, everything has changed so fast, right? So either insurance pick up that chain, because or otherwise, again, if we go in the same mode of what was happening before COVID, then definitely a big difference will come, and again the mismatch will happen. So I hope organizations will be take up more, will be more agile despite being their big sizes, and take up things which were not done till now.
Madhu?
Yeah, I think at the start of the pandemic, we had a lot of people saying we are at a black swan moment, right? 8-9 months out, the global equities are at lifetime highs, right? So I don't think anybody can meaningfully put. I think the whole aspect of predicting is just gone for a toss, worse than what Trump's outcomes were, right? But fundamentally, I believe, at least in the banking, payments, and the broader financial services space, I believe over the next 3-4 years, payments will increasingly become invisible. We'll see a lot more adoption around wearables, IoT, which is likely to sort of take off in a big way thanks to the contactless infrastructure that is getting laid out in India, as well as we'll see a lot more velocity with which companies will start embedding financial services into their products, right? So we are pretty excited for the next 5-6 years in terms of how India can transform and sort of show the world how in a sort of interoperable fashion, we can build financial services infrastructure.
Thanks a lot, Madhu. Thanks Madhu. Thanks, Jose. Thanks, Ravind. Thanks, Hero, for joining in the conversation. I'll end the conversation with possibly some of just two thoughts which came to my mind while hearing to all of you, as well as some things which I observed on the ground. One thing, possibly from an insurance point of view, is that can there be an insurance product attached to every single financial transaction, which is when I'm going and buying maybe a cup of coffee at a shop, can there be an insurance embedded to that to say ki bhai kal ko food poisoning, if anything of that nature happens, then you are insured. And so every single financial transaction, can there be an insurance product embedded to that? And second, from a lending lens point of view, just the way payments got revolutionized with UPI and value chains of that nature, can there be a possibility of maybe Government of India looking at some kind of an FLDG to be provided to the lenders to say that wheresoever for small businesses the digital footprint is getting created, give them 1,000 rupee loan, give them a 5,000 rupee loan, and we will possibly provide you with an FLDG of 20%, 30% or 40%, and bring more people to the umbrella, helping them in the similar, maybe structured something like an LACR or loan against card receivables. In this case, it will be loan against digital receivables which are coming via UPI and so on and so forth. So maybe we'll observe much of it coming and so on and so forth. So we'll close the session. Thanks to the Singapore Fintech Festival team and everyone in the panel and all those who were from the audience side who joined us. Thanks a lot to all of you. Thank you for taking out time.
Thank you very much.
Thank you, Swanil. Thank you.
Great. Thanks. A huge thanks to all of the panelists on this session. And it has been a very interesting conversation.